This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management is pleased to be one of the founding members of the Trade Finance Working Group launched on the 27th of January 2023. Created under the auspices of the Alternative Credit Council and AIMA, the Alternative Investment Management Association, the working group brings together alternative lenders in the trade finance sector to support the development of trade finance as an asset class, with the remit to raise awareness of trade finance amongst investors and address challenges to greater participation by alternative lenders in the sector. Joining this group aligns perfectly with TradeFlow's experience in this asset class and its mission to help reduce the growing trade finance gap faced by SMEs.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. U.S. energy firms cut the number of natural gas rigs by the most in a week since October 2017, while adding the most oil rigs in a week since June, energy services firm Baker Hughes County said in its closely followed report on Friday. The total oil and gas rig count, an early indicator of future output, rose 2 to 761 in the week to February 10. Baker Hughes said that puts the total rig count up 126, or 20%, over this time last year. U.S. oil rigs rose 10 to 609 this week, while gas rigs fell 8 to 150.
OPEC Secretary General Haytham Al-Ghais said on Sunday that the group expects oil demand to exceed pre-pandemic levels this year, reaching almost 102 million barrels a day. Demand is projected to further rise to 110 million barrels per day by 2025, he said. OPEC remains committed to supporting oil market stability, Al-Ghais said in a speech at the Egypt Petroleum Show.
Moving on to the top news in the energy sector.
The value of Singapore's oil trade in 2022 climbed by 47.5% from a year earlier, extending a 43.6% increase in 2021. Driven mainly by rising domestic exports and re-exports of refined products, government agency Enterprise Singapore said on Monday. The rise in the oil trade value came in a year when global oil prices rallied after Russia's invasion of Ukraine reshaped energy markets and oil majors reaped bumper profits. Singapore's domestic exports of oil last year firmed by 52.4% in nominal terms, extending gains from a 38% growth in 2021. Data from Enterprise Singapore showed.
Oil prices eased on Monday after rising 2% in the previous session, as investors focused on short-term demand concerns stemming from crucial upcoming U.S. inflation data and refinery maintenance in Asia and the United States. Brent crude futures fell 74 cents, or 0.9%, to $85.65 a barrel by 0400 GMT after a 2.2% gain on Friday. U.S. West Texas Intermediate crude was at $78.99 a barrel, down 73 cents, or 0.9%, after rising 2.1% in the previous session. Crude prices are softening as energy traders anticipate a potentially weakening crude demand outlook as a pivotal inflation report could force the Fed to tighten policy much more aggressively, said Edward Moyer, senior analyst at Oanda, referring to U.S. consumer price data due on February 14.
Next, we have the top news in metal markets.
China's ferrous futures fell on Monday, pressured by mounting domestic steel stocks and rising portside iron ore inventory, indicating a slow recovery in demand even as the latest indicators point to a rebounding economy. The most traded May iron ore on China's Dalian Commodity Exchange ended morning trade 0.7% lower at 854 yuan and 50 fen, $125.07, a ton. On the Singapore Exchange, the steelmaking ingredients benchmark March contract was down 2.2% at $124.72 a ton, as of 0431 GMT.
Copper miner Freeport Indonesia has temporarily halted mining and processing work at its Grasberg mine after flooding and debris flow from heavy rains and landslides damaged its milling complex, Freeport McMoran Inc. said on Sunday evening. Freeport McMoran said it expected first quarter 2023 sales to be lower than previous guidance provided in January for 900 million pounds of copper and 300,000 ounces of gold, but it did not provide updated figures. Preliminary estimates indicate that operations can be restored by the end of February, the company said, adding that there was no impact to PT Freeport Indonesia's long-term plans. We will now look at the top news in the agricultural. China's ports have been clearing cargoes of Australian beef within 1 or 2 weeks since the start of this year, much faster than the months taken during the last 2 years, industry participants said on Friday. The latest sign of thawing tension between the two countries comes after a visit to China by Foreign Minister Penny Wong, the first such trip by an Australian minister in 3 years. Last month, China allowed 4 companies to resume coal imports from Australia following an unofficial ban on the trade since 2020, with the first cargoes arriving this week.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.